How does Trump change your view of the world? Broad strokes.
So Trump is going to change, I think, both from economic policy and foreign policy, is going to take broad, big steps in the world. And we think about it from an economic-centric perspective, as well as, I like to read all of the geopolitics, but I focus on the economics. But from an economic perspective, his plans to say lower the corporate tax rate from 35 to 20, or I think he wants it even as low as 15, entering kind of bringing with it accelerated depreciation, as well as kind of a honeymoon or a specific period of time that you can bring back the offshore capital. All of those things are going to be extremely stimulative. It will start favoring labor over capital, which we've been favoring capital for the last decade or so. But what we're going to see, right, if you get accelerated depreciation, you're going to actually see real capital investment. And if you see real capital investment, maybe the productivity numbers that have done nothing but go down in the United States, because the capital that's been being used has been engaging in share buybacks and dividends, which have zero productivity associated with them. So we're going to see real capital investment. We're going to see trade competitiveness from our corporations with the lower tax rate. We're going to eliminate offshoring and Europe stealing our tax base. And we're going to start, let's say, getting fairer shakes or better deals with our trading partners. All of those things are going to happen at basically full employment. So we're going to see a very stimulative environment if Trump is successful in his endeavors, which is going to be very positive, I think, for the United States and slightly negative for the rest of the world. But it's not like the globalist nightmare, in my opinion, as they are trying to make it. I think we've been we mentioned that, talked offline, I think the U.S. has been a wage giver and a price taker for the last decade or so, and we're just going to be a wage taker back for the next few years.
So stimulative for the U.S. economy,
yeah.
Potentially inflationary for the U.S. economy, better for the U.S. at the expense of the rest of the world. Is it as simple as short rates dollar strong?
If you need to boil it down into a soundbite, I would say yes. Clearly, there are idiosyncrasies of every trade relationship, but one would think that if we get to this, the question is, how do we pay for it? How do we pay for cutting the corporate tax rate from 35 to 20 or 35 to 15? It's my view, our view at our firm, that border tax adjustability is the only way to pay for it, and it's basically taxing the trade deficit, right? It's broadening the base and forcing your trading partners to pay for the cut in tax. It's actually very elegant. And as I mentioned offline, in 1990, Marty Feldstein and Paul Krugman actually agreed on something, and they co-authored a paper for the NBER on the positive attributes of border tax adjustability. I think one could make it a bipartisan success as long as the special interest groups in the U.S., i.e. the Retail Federation, the Walmarts, the Nikes, the people that have supply chains offshore are lobbying like hell against it. And I think if Trump runs into enough resistance on border tax adjustability, he'll just use his authority at the Commerce Department to impose tariffs.
As a macro, if you will, sometimes special situations investor, how'd you play the election?
So we weren't playing, quote, the election going into the election, but what was interesting was, as many people know now, is when you saw Trump was starting to hold the lead in Florida and then kind of solidify his lead in the upper Mississippi River area and Michigan and the other areas around there, Wisconsin, the markets made very, in our view, irrational moves. Especially global currencies went into kind of a risk-off dollar weakening scenario when, if you studied the policies of all the various participants or understood them, they were all going to be pro-growth, and Trump was actually the most pro-growth of them all. And so we took fairly large positions in global currencies that night. And
like Carl Icahn, 11:30, 12 o'clock at night, you were investing.
In huge amounts, yeah, because we just thought the world was misinterpreting the win, and fortunately enough, every now and then you get something right. It doesn't. You don't get it right all the time. God knows I don't. But that one seemed to be a little easier.
That was an equity trade.
No, it was all currencies.
All currency trades.
Yeah, currencies and rates.
Are there any natural Trump trades right now?
Yeah, I mean,
because some of this stuff has played out clearly since the election.
Well, says who?
No. Played out to a degree. I'm not saying it's played out to its natural
conclusion. It's moved
conclusion.
a little bit so far. I think that given what I just went through with you, look, real rates in Germany are at their lowest level ever right now. And inflation in Germany is spiking. It's not even moving in a linear fashion. And you've even seen members of the ECB and the Bundesbank speak today about the fact that I think we're going to see inflation running much hotter than any of the central banks thought it would. And therefore, I think the move in bonds is just beginning.
How quickly is Draghi, if what you say plays out, the natural course of action would be for the ECB to raise interest rates?
Well, yeah, so it'd be a combination of tapering. Even though he cut it 20 billion last time, he somehow convinced the market that he wasn't tapering. He's going to have to taper some more and possibly raise rates.
How soon?
I don't want to speculate there, but let's say in life cycles, what Trump's going to do is he's going to speed everything up.
You have been out with a bearish view on the Chinese banking system. A lot of people say you're bearish on China, but it's really bearish on the banking system in China, right? For about a year now.
That's right.
What, if anything, about your thesis changes with Trump?
Well, whether you look, so first of all, you kind of have to study the backgrounds of everyone that's advising Trump on China. So whether it's Wilbur Ross or Lighthizer or Navarro or D'Amico, hey, read Navarro's books, read D'Amico's blogs.
Try a little Tillerson too.
And Rex's comments in his confirmation hearing. Look, what they're all doing is they're all saying that China's kind of gotten the better of us in maybe the last 8 to 10 years. I tend to agree. But what's important about that is developing the lens that the White House is going to be looking at China through is really important as an investor. And my view is that somewhere between free trade and 45% tariffs is where we're going to end up. And with that comes profound consequences. And some of those are economic and some of those are geopolitical.
It's important whether he, and when I say he, Trump and his administration choose to take on China through established channels like the WTO, or whether they choose to impose some kind of a tariff, like you say, whether it's 45% or something less. What do you think is most likely, and is that part of your thesis now?
So I honestly don't. I've never met Trump himself, but I don't know what's most likely. What I know is what I just said. Somewhere in that continuum is where we're going to end up. My own view is the only way to pay for corporate tax reform in its fullest sense is through border tax adjustability and not through tariffs. But that has its legislative problems.
Let me put it to you this way. Let's say, for argument's sake, the United States imposes some kind of a tariff on Chinese imports. This might be important to your thesis. How does she respond?
Yeah, as she's mentioned, they have a plan for response, right? So the first plan for response is economic. The question is, does all of this economic wrangling really start a fire that ends up moving into a kinetic response in the South China Sea? It's something we hope does not happen. But the big question is, where is this all going as far as trade? And then, look, when I look back at armed conflicts, I think they all are rooted in some sort of economic, whether it's a grab or a malaise. And I think what we're headed towards is some sort of, here's the issue, right? China's banking system has been recklessly built. This idea that China is an emerging economic power and is now the driving economic power in the world, I think is illusory, or it's somewhat of a fallacy. They've built their credit system. They've grown it 1,000% of GDP in 10 years, while they've only grown GDP 500%. They've recklessly built a system that's going to need to restructure. And that just so happens to be metastasizing right when Trump becomes elected. So it's going to be, right, the world's a multivariable equation, and what's happening to China is going to happen on its own, on top of the fact that Trump is going to get a better deal for the United States. Those two things concurrently are going to cause profound change in China at a period in time in which Xi is consolidating his power and entering the 19th Party Congress this November. This is all happening kind of as a confluence of events that were completely unplanned, but they all happen to be happening at the same time.
It sounds to me like you have more conviction.
Look, this is a fire that's been smoldering, and it's now starting to burn.
Trump is an accelerant.
And Trump is just more gasoline.
What about the counter arguments, which you've heard over and over again? But here's one, right? Things appear to be improving a little bit for the banking system, right? Deflation is a little less of a threat. Corporate profits are improving in China, and deposits keep growing.
Right. So,
and they have a different funding base than other countries, largely domestically deposit funded.
So I guess your basic thesis there is that we all believe in the omnipotence of the Chinese Communist Party and that they can throw any lever they need to throw because they're internally funded, and none of these problems will happen, i.e. economic gravity will never take over. This deposit growth is an interesting one. So in the last 18 months, credit in China has grown $6.5 trillion. So let's use dollars so that it's easy to discuss. It's grown about $6.5 trillion. Deposits have grown 3. So credit is growing exponentially, i.e. they're basically having to fund enormous moves in credit growth just to keep, we call it running to stand still. And that's where the banking system is today. Think about the emergency injections that they've had in the last 2 weeks. And they've clamped down on capital outflows dramatically. And think about this, China wants to be a global reserve currency. And there are many people that already count it as one. How many global reserve currencies have you ever seen have to raise overnight rates to 120% annualized to stop outflows? Right? It's all, I don't know, there's a dissonance in everyone's belief that China is the power that they say they are.
Let's talk about how you're expressing your view. People think and believe that you're short the Chinese yuan. Is that the case?
So yeah, look, I believe, so I'm not going to talk about specific positioning, but I'll answer your question another way. I'll say that the ultimate arbiter of my argument versus anyone else's argument is the currency. Because if I'm right about the banking system, they're going to have to recap the banking system. If they have to recap the banking system, the currency is going to be worth a lot less.
Well, the reason I ask about the yuan is not just to understand how you express the view, but also to understand whether there are collateral trades to be made.
For sure.
Right? Like the Hong Kong dollar pegged to the US dollar, for example, the Taiwanese dollar. Do you express your view that way as well?
Yeah, I think when you look at specifically, so, right, I don't know how many countries are recognized by the UN today. I think it's 190 some odd countries. Let's say it's 200 countries in the world. 100 countries' top trading partner is China. So when you look at the trade relationships with China, whether they have pegged relationships, floating relationships, or managed relationships with their currencies, those 3 constituencies are worth investigating. And when you look at who China's biggest trading partners are and what effects will be naturally imposed upon their trading partners, then you high grade those. And so the answer is yes. There's primary damages, there are secondary and tertiary, and those are something we've spent many years thinking about. And you're right, the Asian Pacific region clearly is going to have maybe a proverbial race to the bottom because it's the only way this can happen. That has profound implications for equity markets.
Is it safe to say that you are short those currencies?
It's safe to say that the Asian theater is where we've been focused for 3 years, and that we have done a lot of analysis on who we think is going to be, let's say, impacted the most.
The conventional wisdom is that Trump is bad for China. We've covered that ground. Trump is bad for Mexico. Trump might be good, and populism in Europe might be good for Russia. What's your view on Russia?
My view on Russia is so let's talk about economically first. Russia had, in 2014, the ruble was trading around 30 to the dollar. It's kind of pegged around there. And as you know, Russia's economy is primarily driven by Urals crude, or let's just say global crude exports. So when crude prices fell from 100 to 27 or wherever they went, and are now back in, call it 50, Russia decided to take the adjustment all in 1 year, all in their currency. Their currency went from 30 to 80 rubles to the dollar, and today it's right around, I think it's 59 rubles to the dollar. Russia's finance ministry understands the world as well as any finance ministry in the world. They are some of the most talented, let's say, economic thinkers in my view. And when you think about the way that they took that adjustment, they still maintained a current account surplus. Okay, and they are already back to kind of 2.5% growth. It's albeit lower growth than they want. They took that adjustment through the currency. China is in between a rock and a hard place. Like, what happens to an economy at max leverage when interest rates start moving up globally?
So, just to put a finishing touch to it, short China, long Russia?
That's where it's a good place to start.